everyone. Welcome back to another trading and fundamental analysis show here at Sin City Crypto. My name is David. I'm your host for today. Interesting day in the markets today. Bitcoin's looking very, very good here. Okay, so we actually entered into a long that we alerted our Discord members to, and that long was off of this $86,500 level. Couple of things of concern. One, Bitcoin dominance continues to rise. Now, I say cause for concern if 90% of your portfolio is in altcoins. This is not good, but we're at a 61.78% level, which has been resistance for Bitcoin dominance. And it looks like we're creating at least some sort of ascending channel, ascending triangle, or a rising wedge pattern for BTC dominance. But overall, if you want altcoins to run, you want this chart to be going down, just like it did in 2020, leading into the halfway mark of 2021. That is where we saw the initial massive rally in altcoins. We saw one more dip back down around 38.95%. That is when altcoins had its top. And then Bitcoin dominance since 2022, September, it has been nothing but a slow grind up for BTC dominance. As you can see here, it's again, if you're a majority in altcoins, this is not good. But is this telling us something in the markets? Is the market structure changing for good? And is Bitcoin just going to gobble up market share of 95% of altcoins? And if that is the case, then what are the altcoins to keep an eye on? We'll talk about that as well. I do want to start here with the NASDAQ. Pretty bearish here on the daily. Now, we attempted to reclaim. So we have this trend line here going all the way back to 2023 January. And this is our 200-day moving average ribbon. Now, you want to be trading above, okay? You want to talk about structure and trends. You want to be trading above your 200-day moving average. We recently broke below. We got our first attempt at a reclaim and failed. And now we've had our second attempt to reclaim and we have failed. So that is not a good sign for the NASDAQ. And we take a look at going back to 2022 of January. Something very similar happened. We broke below, had a spill off, came back, failed an initial retest, chopped sideways, failed the second retest. And then from that second failure, the NASDAQ dropped around 13.5 to 14%. Are we going to see something similar where we make an attempt at this again? Or was this the second reclaim or the second attempt at a reclaim? And then we're going to see a 13 to 15% spill off in the NASDAQ. The markets are very unstable right now. And it was bleeding into Bitcoin a lot more than it is now. Again, we are seeing Bitcoin show strength here at a very key level, which is why we kind of initiated our long trade. And you're seeing a decent amount of volume come in on both these spikes, right? Both of the retests, a nice bounce with volume at that 86.5 level. We did wick all the way down to a sub 86K, but we shot right back up for BTC. This is on the 8-hour for Bitcoin. We still remain in this longer term rising channel here, which again, don't mean to sound like I'm beating a dead horse here, but these typically break to the downside. The downside target immediately we'd be looking at, obviously, is the bottom range here. See what price does there. But if we do break, 84.1 is going to be a key level, and then you're looking at 81.4. If we lose 81.4, you're probably going sub 80s, and then we get our max pain scenario that I've been talking about on this channel, which is right around 71.6. 71,887 to be exact for BTC, which is this range here, between 71.8 and we'll call it $72,000. To me, that would be max pain. I don't think we're going to get there. I think that the market sentiment has changed. We did have some big news. And again, this show, we don't really go into news, but obviously this is pretty big. Now, the interesting thing here is a lot of people, including myself, should never assume that, because why would I think that a multi-billion-dollar company would use their own money instead of just leveraging debt? Well, that is what they're doing. GameStop, instead of using their $4.7 billion to buy Bitcoin, they're looking to raise $1.3 billion via a private offering, a convertible senior notes that is due in 2030. So essentially a 5-year note that they don't have to pay in 5 years, $1.3 billion. And this got me thinking, and I've read this book called It was a Lehman Brothers book, Collapse of Common Knowledge, or Collapse of Common Sense. It was something. It was such a good book, kind of highlighting what made everything just absolutely crash in the 2000s, like the mid 2000s, 2005, leading into 2008, what Lehman Brothers was doing, and how the markets were so over leveraged. And I'm sitting here, I'm thinking, we're looking at what Strategy did and all the money that they've raised, the debt that they've incurred. Now, I know it's at 0% and the bonds are due, but my brain just cannot stop thinking about the scenario that this becomes a trend and it becomes so overinflated with the amount of debt that is leveraged to purchase Bitcoin. And then you have these large hedge funds that do what they do, being as Bitcoin is now on Wall Street with the ETF, it's going to be even more intertwined with Wall Street and the traditional financial markets, that there isn't going to be some sort of black swan event. You look at what happened with Hyperliquid today, where you essentially had a perpetrator that screwed over the Hyperliquid platform. They liquidated themselves on a short trade, pushed the price up, and then left Hyperliquid with the rotten contract, and their stockpile, I believe, was down 60%. Their asset backstop was down 60%, so not good. Hyperliquid had to pull the plug. The name of the token was Jelly Jelly. So when there's opportunities for people to kind of expose and make money from doing that, people are going to continue to do that. They've been doing it. They're going to continue to. So I just can't get the thought out of my mind that all these companies are going to start leveraging debt to buy Bitcoin. And I don't know, like, I'm not a macro guru. I don't even know how this shit would work on the back end of it, what they would need to do, how much money they would need, what kind of resources they would need. But something just tells me this could be setting up for a massive bubble like we saw in 2008 with over-leveraged mortgage-backed securities and those MBSs that were filled with garbage that were getting good ratings from the Standard & Poor's index. So that's one thing. Just one reservation I have is, okay, you want to raise money, great, but I don't know. Am I a little paranoid to think that? Let me know in the comment section. But I don't know. It's like we've kind of seen the story play out a few times, right? So Felix said, as long as we make money, who cares? Yeah, as long as you make money, remember to take profits. Because if what I'm saying actually happens, or something maybe worse happens, then ain't nobody making money. Not the people in crypto, and definitely not the people out of crypto either. It's going to say hello to a few people in chat. Big shout out to Rustybot. Came in with a 20 Nokia phone super chat. So my boy Crypto Billy in here. What's up, Billy? Rustybot, Blue Man Music, Eugene, Brian, Semenimo, Crypto Princess. Hello. Mario Poman. Yeah. So if you guys are new here, welcome. Hiru Hotep said, historical 30% Bitcoin correction, first quarter of the year, have not bought one altcoin yet. Yeah, I mean, again, you look at the dominance chart for BTC, it's grinding up. It's making higher lows, not necessarily higher highs. Well, it did make a higher high here. But we'll see. You're not going to get a big altcoin rally. You'll get altcoin rallies in small sectors and kind of small batches, but you're not going to get an overall altcoin rally. Like we've seen rallies out of Uniswap. We've seen rallies out of Avalanche. Actually, Avalanche had a decent rally. Let's take a look at an Avalanche chart. And also, if there's anything you want me to take a look at or get my thoughts on a project, please feel free to do so. Before I look at that, let's look at Hyperliquid. Hyperliquid was getting destroyed today. So actually did get a nice bounce off of this value area we identified here on Hyperliquid. With that being said, though, I would not touch this with a 10-foot pole. I don't know what's going on. They're talking about refunding people who lost money. There's now concerns that the platform is more centralized than the team led everyone to believe because they were able to do what they did to kind of minimize the losses from what happened earlier this morning. But this is a chart. I mean, look at this here. This was a massive liquidation, and it took us below our 200-day moving average on the 1-hour time frame fairly cleanly. With 2 consecutive liquidation candles to the downside. Again, we did see a little bit of bounce, but this is not something I would touch. I want to see what happened, a postmortem. What are they fixing? What are they changing? Do the traders that are on there, did they lose their trust in the platform? Because if they did, that's not good, because there's not a lot of people with a lot of money that are in the space now, as fresh slew of retail capital has not come into the space yet. So that money that is sloshing around, if a majority of it decides to leave a platform, that platform is pretty much crippled. And so Hyperliquid is in that spot. Now you could look at this as saying, hey, I don't believe the news or what happened. People are overblowing it. It's way out of proportion. Excuse me. I think I'm coming down with some sort of chest thing. I did quit vaping, so maybe that's part of it. But either way, apologies for the throat clearing there. But, or could people say, look, this is a big nothing burger. I believe in the platform. I'm going to still use it. The UI is great. That's what people say, is the UX and the UI is great. I have personally not traded on Hyperliquid, but I know a few people that have, and the same thing that everyone says is this platform, their UI and UX is really good. So if you're like a super high risk, high reward person, and again, this would be a super high risk for me. I am more of a wait and see on Hyperliquid, but if you can get this price back around $13.60, might be a good entry to add to a spot bag, or potentially a quick long trade and look to exit before we retest this 200-day moving average on Hyperliquid. Now, I was going to look at Avalanche. I completely forgot what I was talking about with Avalanche, but I was talking, that's what I was talking about. Avalanche was rallying. So Avalanche has been one of the few that saw a decent rally. This is on the daily for AVAX. We did see increasing volume, but as you can see here, like a first indicator of is a move coming to an end, or we're going to see a pullback, is dipping volume, which we did see on that second to last candle here on the daily chart for AVAX. Let's take a look. We are still trading well below our 200-day moving average. $30 is where you reclaim. But so far, got a nice V-shaped recovery, going into some consolidation. We took out this high. Now we can still close above. Now this is about 2 hours and 45 minutes left for this daily candle. If we can close above $22.55, so we're not far off, that would be a great first sign. You can see here going back, this was a key level before Avalanche had its massive rally. It had this nice bounce off of that 22.60 level, going all the way to current cycle highs, which is around $55.67. For AVAX, we do want to reclaim this level. What I think is going to happen, as you can see here, this was back between the 23rd of February through the 1st of March. We were consolidating below this level. Okay, so this was resistance, consolidating below. What I think can happen is, or I think is going to happen, is Avalanche, this daily candle closes above and we consolidate it on top. We built some support on top of that 22.55 level, and then we try to take out the next big high, which is around $25. If we do, between that and $30 is $26.50. And so, but I'd be careful if you are going to put in a long trade, which I would wait. We're seeing consolidation. We can even go down to the 1 hour time frame. And you can see we kind of chopped a little bit. We had a nice bounce here off of on the 1 hour time frame from $22.60 up to around $23. But we've broken below this trend line, at least on the shorter time frame, on the 1 hour. And a potential head and shoulders pattern here on AVAX, head, shoulder, head. But we can throw on some indicators and we can take a peek. Let's first throw on our cloud. Now, I'm going to show you, so we entered two trades, Bitcoin and a Uniswap long. I'm going to go over the Uniswap long. That one is underwater. And I want to kind of go through the thought process that I had when I put the trade in and kind of analyze in real time with you guys watching what we could have done differently and what went wrong. Should we have waited? Were the indicators wrong? And so we'll go over that together. But for Avalanche, you're in no man's land, okay? At least on the 1 hour. So you want to wait. We had a bullish crossover from our conversion line to our baseline. Now, typically, this would have been a good entry signal, but obviously, it was a false signal, which is why you want to have multiple indicators and multiple things you look at, not just one signal, not just a MACD crossover or an RSI high or low, or really one indicator. You want to look at it from a multitude of different indicators and to create an overall picture for an asset. And then here is the 4 hour on AVAX, another potential head and shoulders pattern forming here. Which the neckline would be, that was a terrible neckline. The neckline would be somewhere around there. We come back. We probably get a bounce off of this 2188 level, and then you're looking to fall below. You do have some support according to our cloud. Love using the Ichimoku cloud. This is a super, like, it's been around for a while. It's a Japanese charting technique. So the initial support I would be looking at on a breakthrough would be the lower end of this 200 MA, which is $20, which also, depending on where this thing breaks, you have some confluence there on your cloud levels as well. We throw on our price action concepts. Let's take a look. Any gaps that we need to fill potentially, and I'm going to remove the 200 MA ribbon. So we have our previous day low sitting right around $21.30. Now we do have some confluence on a couple of things. One, this large order block around, say, 8% of trading happened. This is between $20 even and $21.06. That is also the exact level we created a gap as Avalanche shot up on this 4-hour candle. This was on Sunday at 5 p.m. Pacific. We created that gap. Now, gaps do typically tend to fill. If we do fill this gap, previous week low is sitting right at $20. So all this to say, we might get another rally, okay? We might get another rally. Look at $22.55, so 40 cents. Look what price does there. If we break above, I'd be looking to that 25 to 25.60 the range. If not, I am looking along AVAX at $20 even. Again, previous week high, large order block where we saw almost 2-to-1 buyers versus sellers, and also this fair value gap we created on the way up as Avalanche shot up again from a low of around $19.75 to a local high or current high previous day of $23.50. But to me, trading aside, AVAX is an excellent long-term hold in my personal opinion. We talk about quality. There's very few that have quality like Avalanche does, especially after the 9,000 upgrade, allowing anyone to really launch a layer one for like pennies on the dollar compared to what the price was previously. All right, so that's Avalanche. I do want to go over, we already went over that. I do want to go over this. So it's from Sentiment. Bitcoin's ratio of supply on exchanges has officially dropped to as low as 7.5%, which is the lowest since 2018. Now, what does this mean? Well, we can assume that if people are comfortable enough taking their Bitcoin off exchanges, they're saying, I'm not looking to sell anytime soon, okay? What do you do when you decide to sell? You need to put it onto a platform where you can offboard it into fiat if you're looking to take profits into dollars or euros or any other currency that the country or whatever country you're in. So if you do that, that would be a signal like, hey, we're seeing a large influx of money flowing into these centralized exchanges, these on and off ramps. We can expect there should be some selling pressure, and the vice versa could be true as well. People are pulling it off the exchanges. Again, the lowest it's been since 2018. That's 7 years. It's a very long time. And you're seeing similar things happen to Ethereum. I do want to share this here. This is the whale orders and larger trades on the 1 hour from Binance. You see the whales are loving 86,000. You're seeing a lot of buy orders come in at 86K. If we zoom in here, you can see we had a large buy here. This is again from Binance. We had a $9 million buy there. We had should have been another one here. So that was a $9.76 million buy. If you go to the 2 hour, now the levels to look at for selling. So 88.5, you're seeing a lot of volume coming in at 88.5, which if you go back to the BTC chart, obviously you're going to see some confluence there. But you take a look on the, you know what, let's go to the 12 hour here on BTC. 88.3 is where we got to just 12 hours ago. That was a top for BTC, at least a local top on the 12-hour time frame, which we didn't quite get to the top end of our range here. But again, this could be something that becomes very range bound and dulls the markets. But there is going to be some opportunities in Bitcoin, especially as the dominance rises, not just in Bitcoin, but in altcoins as well. The important thing is going to be to combine technical and fundamental analysis when it comes to altcoins. But also what I'd recommend, guys, until Bitcoin's dominance is under like 55%, 60%, don't sit in trades for too long. If you got into an XRP trade at like $2 and it's at $2.50, and you know XRP eventually is going to go to, I don't know, like $10, $12, don't sit there and get greedy. Take your 50% profit multiplied by your leverage. Take that profit off the table, because if Bitcoin's dominance continues to rise, it'll eat away at XRP's dominance. It'll eat away at Ethereum's dominance. It'll eat away at literally everything. And everything will dwindle down and start kind of trending downwards. And you start seeing large consolidation phases. accumulation phases. A lot of them won't ever get the breakout. And I'm not specifically saying XRP, but a lot of it's going to go to zero. And so you want to be in quality projects. So yeah. Anyways, I'm going to, damn, I am like losing my voice here. God damn. Just going to check into the chat here. There you go. It's working again. Nightbot is slacking. Shame on you, Nightbot. What are your thoughts on running storage nodes? Mario, I have no insight into running storage nodes. I don't play in the hardware side of crypto. Maybe I should. It's not something I do, so I'm not really going to comment on it. Bitcoin bounced perfectly off of the trend line. Yeah. Yeah. Kill Gannon. Okay. So one of the platforms I like to use is Nansen AI. It's a little pricey. It's like $140 a month. But for me and my research is really good. This is chains on Nansen. And I've had this sorted out and filtered by largest percentage change in transactions. And look who is number one with a 2x in transactions, and active addresses over the last 7 days are up 1,600%. That is Chili's. Chili's, I'm not an expert in Chili's. I know, I'm pretty sure it was like NFTs and whatnot, but taking a look at a Chili's chart, which by the way, I used to eat at Chili's a lot, then I got food poisoning. This is like 15 years ago. So not very good. Now on Chili's, we did get a bearish crossover on the daily. That is on our Ichimoku cloud. We had a bullish crossover. My apologies. Our conversion line, which is our blue line, just crossed over our baseline, which is our 26-day moving average, the red. Now the trend on the daily is still red. So we work our way to the 1 hour, and the 1 hour is actually green. We did get a trend change here on the 1 hour. Now it has not been confirmed yet, but we're in no man's land here. We did get a cloud change here from red to green. We zoom into the 4 hour. Now the 4 hour, we did get a confirmed trend change. So this would have been a great entry right at around 4.76 cents. And we're looking at a 5% gain multiplied by however much leverage that you are trading on. But we take a look from a fundamental standpoint and Chili's and the amount of transaction volume. Again, we can do this. Transactions have doubled in 7 days, and active addresses have 16x'd in 7 days. So I look at this chart and I look at the higher time frame. We can even go to the weekly and we can get rid of some of these indicators. Let's get rid of the cloud. Let's get rid of that. Let's just look at this pure chart here. Okay. We're seeing in Chili's what we're seeing really in a lot of altcoins, including Ethereum, is a bottom out, decreasing volume, but you're seeing these candles start to form. This was a great bottom signal here. The spinning top signifies exhaustion from the bears, but again, decreasing volume. So this is not something I'd be looking into as far as saying, hey, this trend is going to reverse. We're going to start taking out these highs at 6 cents. We're going to start taking out these highs at 7.5 cents, at 9.5 cents, and then we start testing 2024 highs at around 14 cents. But this is something to keep your eye on. And if it's something that you believe is important and is an important metric, and with your fundamental analysis, if it is something that you believe is valuable, this would be something I would add to a spot bag, maybe into your bucket 1 or bucket 2. Bucket 1 being, I'm going to enter Chili's at 5 cents and I'm looking for a 3X and I'm good. I'm selling all of it. Great. That's bucket 1. Bucket 2 is cycle to cycle. I'm going to buy Chili's now at 4.78 cents. You know, David, you showed me these metrics. This is great. I look for these metrics and I look at what to add for the cycle bucket. And you know what? When we're at the cycle top, I'm going to sell all of it. I wouldn't put it in the long term. I'd put it in the cycle 1, cycle 2. As far as a trade, this is not something I would touch right now. Higher time frames, really no follow through on the move up. Again, on the lower time frames, nothing really that jumps out at me that says, hey guys, this is a great area to get into Chili's. Previous day low held up, right? We got a nice bounce there. Big gap here that we expect to fill at around 5 cents. And really, nothing sexy. We're in no man's land. So again, to me, this is a no trade for me. And you also have a potential reversal. We want to see what this does. I do expect a little bit of resistance right at 4.87 cents on Chili's because of our conversion line here from our Ichimoku cloud. And so, yeah, that's Chili's. But something interesting, the other one was Blast. Now, Blast had a lot of hype coming in last, I think it was about a year ago. People were farming points. It was 6 months ago. People were farming points. So we can take a look at a Blast chart, see if there's any opportunities there. I don't think I even had this on my list. I did have it on my list. It's okay. I wouldn't be able to find it anyways. All right, let's start higher time frames. I don't think this is a chart I've looked at. Let's get rid of this. And let's get rid of this. I mean, you're at all-time lows, right? Now, the one difference here you see, okay? So we talked about these candle patterns, right? These three white soldiers, like a good reversal signal. And we saw a lot of them had decreasing volume. This one had increasing volume and then a sharp drop off. Now, this volume can creep back up. So Blast would be something I would be more interested in looking at potentially and for a long. And then we just draw the first level I see here. And again, this is on the super high time frame, is this area. The second area I'm looking at for Blast, and these are going to be our value areas that will keep on the chart for the time being. It's going to be this area here. So you're looking at, and I'll drop some flags and then we'll zoom in. So you're looking at value area 2 is between 008 to 01. And value area 1 is where we're currently at. And the top end of that is going to be around 0.45 cents. 0.45. So now that we have our areas labeled, our value areas, we can zoom into the daily and take a look at how price has traded in these levels. So for Blast, this might be a really good, you know what? I got to change the visibility on this. Let's go hours on this one. And this one, we're also going to go hours. So this is the 12-hour. If we can get back above, not if, I think when we get back above and into this region, I want to see what price does, because right now, I'd be afraid to long Blast here, because you take a look at these wicks testing that 004 level, and we've gotten rejected every single time, but it's a slow grind up here for Blast. So I want to see what price does here. If we get another rejection, I would be happy to short this thing back down to around 3.61. Zooming into the 4-hour, we're going to keep zooming in. Okay, so you have a little bit of a rising wedge / channel here, as you can see. Oh, this is pretty ugly. Yeah, let's go down the 1-hour. Let's go down the 1-hour. So you can do that. You can something like that, right? The important thing here is this is rising. And I would really call this a deviation because you keep this line here. We have 1, 2, 3, 4, 5 touches on wicks and closes here on Blast. So this one we do expect to break down. Obviously, we talk about this all the time. Anything that rises breaks down. We did come out of this really nice inverse head and shoulders pattern that broke to the upside. And so again, you're in a rising wedge pattern or a rising channel, and you're coming up to the bottom end of a value area that has proved to be resistance. As you can see here, resistance, consolidate, resistance on a retest, and we really traded below this thing once, twice, attempted on a wick, and failed for Blast. And so for Blast, if you're bullish on these types of narratives and you're bullish on this type of fundamental analysis, you can add it to your spot bags. As far as a trade, I'd be happy to short this thing right around 3.95. And we're not too far off from there. So something to keep in mind. All right, I want to take a look at the rest of the markets here for CMC and the rest of the crypto markets. ETH, $2,000. I still have the same sentiment for ETH. I think getting ETH at 2K is an absolute steal. BNB, the markets are just flat right now. They're flat. They're boring. You have a few top gainers in the last like 24 hours. You have, look at that. The two top gainers are stablecoin DeFi plays, MakerDAO and CurveDAO. We also have Convex, which I've been super bullish on, and Athena as well, and Asymmetry Finance. But that one's down pretty big. That one's more of the higher risk side. As far as our trades, so we do have two trades open. One of them is getting destroyed, which is our Uniswap trade. Now this one, I'll show you exactly what I saw and why I entered and why it's going the wrong way. Let's take a look at a Uniswap chart. I was on the 8-hour on Uniswap. So a couple things I saw here. One, we saw a confirmed trend change, right? This 10% trend change, this was confirmed. Two, we had confluence with our cloud, okay? This is where I entered the trade on this retest of the top end of our cloud. We had a break above and we had a positive retest 3 times on a wick at the top end of our cloud. Now, typically, this signifies a bump and run and the pattern and the trend should continue to the upside. Ultimately, obviously, in hindsight, the trend did not continue. We fell completely through and back into the cloud. We did catch a little bit of support right at our baseline, which again is our 26-day moving average. But again, this one is still sitting at an L. Now, my stop loss is sitting right under $6.60. If we break below $6.60, I'll take the L. I'll move along. I'll look for the next trade to make money. But I thought it was important to show you guys that not every trade you put in, no matter how long you've been trading for, is going to go your way. You're going to lose a little bit of money. That's why it's so important to manage your risk, manage how much leverage you put in. So that one we're down. The BTC trade, we're actually still in the green. Our entry was 86,579 on BTC. Now I'm hoping these get filled. So we put in another limit order on XLM at 25.88, and we have our limit order of XRP at $2.35. The XRP one was put in, I think, a week ago, but let's take a look at XLM. That was one of my favorite charts. XLM just, I mean, it had its breakout. Let's look at the daily. It had a breakout. So this was a falling wedge, okay? This falling wedge pattern, we saw the Bollinger Band start to get constricted. And this is something I've seen a lot in the Polkadot charts too. You had a little bit of an inverse head and shoulders play in here, but there's just been no velocity or momentum to carry really any of these moves, any of these breaks. It's like as soon as we get a break, as soon as XLM breaks, volume spikes, another tariff round, the whole signal thing or trade wars, or it's like just never ending. And so there's forces outside of crypto that I believe are holding the markets back, and its overall sentiment on top of retail being absolutely broke. And so until that changes, we might see more of the same, which is, again, even why it's so important to have tight stop losses, and don't be afraid to take profits, even if it's like 15 to 20%. That is still money. And as your portfolio grows and your trading account grows, 15% of 1,000, sure, is $15 or is $150. But you grow your account 15% of 100,000. Now we're talking 15K. Now we're talking a brand new car. If you buy a Hyundai or Toyota, which Toyota, I'm a big Toyota guy. I love Toyota. But XLM, we had a breakout. We saw volume start to creep up. I was like, all right, this is it. And then nothing. So if we do get another retest of this purple line, 25.88, I would love to get into another long on XLM. Now we are creating some higher highs and higher lows, which has given us this rising channel. You can maybe argue this is a bear flag pattern, but this is pretty extended. Let me hide, and I gotta label these, huh? Let me hide these trend lines. Let's hide this one, hide that one. Okay, perfect. Let's go here. So for XLM, yeah, 25.88. If we do get that move, by the way, that would mean a break a break of this pattern. If you don't want to wait for 28,588 and you don't think it's going to get there, you can come in along at a 28 cent flat for XLM and see a nice bounce. Every time we've come down here, we've bounced. This bounces around 12%, and the more recent one off of the low was around 10%. But for me, what leverage do I have this at, by the way? I think I have it at a 10x leverage. Yeah. I feel confident at 25.88 for XLM. But again, this is a project that is just, it just needs the markets to cooperate. Unless some big news comes out that really the markets don't give a shit what it does, that's kind of where I'm at. So, guys, I'm going to cut a little short today. I'm having some issues with my voice, man. I don't know what the hell is going on. Poman said, can you look at DAG Constellation? I'll look at that tomorrow, I promise. Just remind me. Anyways, guys, thank you all so much. I love you guys. I will see you tomorrow. Peace.